Welcome to the Swing Trading with Cycles channel. It is January 4th, 2023, second trading day of the year, at least in the US. Happy New Year. We're going to do our update on the broader markets today. So we're going to look at the Nasdaq, we're going to look at the Dow, we're going to look at the S&P and the Russell 2000, the small cap index. We're going to look at all four. We're going to start with the Dow because it is the most bullish. That's important to know about. But I'll say the headline. My last update on this was December 16th. It was right after the FOMC meeting, and there was a very, very clear sell signal. I mean, the title of the video is called Massive Sell Signal. Since then, we've mostly been consolidating, and I'll talk about that. That's why I haven't reported. Much, because there hasn't been much change, right? Like, we've just been consolidating here. And so think of this as the pre-breakout update, and then I'll give another update once we break out of this consolidation. We did have the Fed minutes today, again, January 24th. Maybe that's giving us something. But let's talk about the indices. I'll say it's possible that the Dow has actually bottomed already, that it had its bottom in October, and that whatever low we're going to see here in Q1 is going to be a higher low. We're going to have to see if that actually turns out to be the case. Let's walk through these. So we're going to look at DIA. That's the ETF that tracks the Dow. This is the daily chart to start. Cycles analysis. It's the same stuff in each video. We talk about cycles as a way to categorize the price action. Quickly understand, how long did that rally last? How long did that decline last? Have we declined for so long that we're probably in the window for a bounce? Have we rallied for so long that we would expect some kind of pullback, even in a bullish trend, right? A higher low. And so with the Dow, this most recent, and you're going to notice the four indices are very similar in their structure. Obviously, the prices are different because the prices of the ETFs are different, but also the levels are different, in some cases more bullish versus others. So for the Dow, the DIA is the ETF we're looking at. It topped out on day 41, which that was the day of the Fed, the whole Fed. That was the week of the Fed where we had the CPI and then we had the Fed. So we had a massive gap up thanks to the CPI at 8:30 that day and then we just sold down. And the Fed didn't help anything. And then, of course, we had later that week Christine Lagarde, ECB president, just talking about how they're going to be as hawkish as possible to fight inflation in Europe. So a lot of downward pressure on risk assets in general. And so you can kind of see this very clear, big downdraft. Since that big down day, you had four days of follow through. So lower low, and notice that's why it's so important. This channel is all about trend analysis, and what you want to understand with respect to a trend is a downtrend is lower lows and lower highs, and uptrend is higher highs and higher lows. If you're not doing both of those things, then you're just in a trading range. You're consolidating. You're not trending up or trending down. So in this case, for this 4-day period, very clear trending down, right? This is a lower low than this. This is a lower low than this. This is a lower low than this. And finally, we got our lower low than this. That was on day 48. And then we bounced. We made a swing low. Check out the pinned comment. That's going to have all the info that you need. Overview of cycles analysis. A deep dive of what is a swing low? How do I identify swing lows? What's a swing high? How do I identify a swing high? The TLDR is a swing low. It's how an uptrend begins. A swing high is how a downtrend begins. That is the sort of gist of it. And so actually, I misspoke. This is actually not the low. It's this. So we made this low, came up, made another lower high, and then this is actually a slightly lower low than this, right? And so just to be like crystal clear, like to see this, it's important to see this kind of in your mind's eye. We had this clean move down, and then this that's a lower high, and then you could call this a double bottom, right? Because it's like pennies lower than the previous. And now we're just kind of consolidating here, right? Waiting to break out. Let me ask you a question. What direction did the trend start in before the consolidation? It's pretty clear. That's a fact. There's no interpretation like, oh, well, it started lower, right? We had this big move lower, and now we're coiling, consolidating here. So the odds suggest that we're going lower, right? It's entirely possible that we actually break up from this structure, have a massive, and that would catch a lot of people off guard. That would be a hell of a rally because this is so obviously a bear flag. That's why we focus on this channel on the math, the higher highs and higher lows. Is this number higher than this one? Is this one lower than that one? Because yes, this absolutely looks like a bear flag, and I mean, I guess you can't really say it is a bear flag until it spills over to some degree, but in actuality, we can't get super like we still, that's our level, right? One sec here. That is our level. Just make this line a little darker. So we have to break above that consolidation, right? Like you imagine a candle, something like this, and then we're kind of off to the races, right? At the same time, you could imagine something like that, right? And obviously we have this long wick, so we'd really need to go below that low. But once you're down in this area, like below all these lows, then a test of like these wicks is like just obviously on the table. And it's really a question of, is it going to hold? Given how much those areas have been tested, again, the odds suggest that it won't, right? Because it's been tested so many times. So you're really looking for a break below that or above here. It's really that simple. So at some point we are going to break out. And because, how long is this? Like we could call this consolidation too. Let's call this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of doing this. Man, enough to make you queasy. If you think about this from a cycles perspective, since this was our low, this is potentially our daily cycle low on day 41. So this is day 1, day 2, day 3, day 4, day 5, day 6, day 7. Day 7 is today we've made a high at 334.04. The previous high was 333.82. So we just made a new high today. That's why we have this 7 here. So we're making a new high on day 7 of the daily cycle. And so what I suspect is setting up here is we're going to get the move lower. What we're doing here is printing a daily cycle high. The same way this was a daily cycle high and then we started to decline. This was obviously a very short decline, and that's because this daily cycle high came really late. That's bullish, right? It means the rally lasted really long. Just in layman's terms, the rally lasted 41 days, right? And you can do the math. If the whole cycle is 48 days and the rally lasted 41 days, it means the rally lasted 41 days, the decline lasted 7. Now, I suspect we're going to get something that's the reverse here, right? Like a rally that lasts, maybe today is the top, right? Days, a rally that lasts 7 days, and maybe a decline that lasts like 30 days, 33 days, 25 days, somewhere in that neighborhood. So I suspect a wonderful short is setting up here. I don't think this is the one to short, and we'll show, like, again, Dow is stronger than the other indices. If anything, probably more like QQQ or IWM. So that's enough time on the daily chart. Let's move on to the weekly. So, and I'll turn this back to light mode because of the colors I have on here. So these are your weekly cycles, and this is a high on week 1, 2, 3, 4, 5, 6, 7, 8, week 8, and this would be a high right now on week 9. So the same way we were just talking about daily cycle highs, this is a high for the weekly cycle, and that bearish week that we had with the CPI print and the Fed print, that was this week right here, week 9. It created a bearish outside candle. Again, you should take a look at that last video. Again, the title was Massive Sell Signal Triggered. This is a massive sell signal. It's a blinking red light to get out. And if you're not following on Twitter, definitely take a look at the link in the description. I tweeted this out as the candle was forming during the week, like, we're forming a big, ugly, bearish outside candle for the weekly. That portends bad things. Now, as I always say, we could get a huge green candle that comes in and saves the day. Like, imagine if next week's candle was something like that, right? Well, boom, I can't be bearish anymore, right? Like, you can't be bearish in the face of that kind of evidence, because that would make higher highs across the board. You have to ask yourself, how likely is that to happen, right? Like, is this a high probability event that we're going to get a candle like this? I mean, I think we can all agree that it probably isn't. We know the Fed is trying to talk down the market. We know that we're consolidating here at the lower end of the range. Everything points to the idea that this is preparing for a move down. And this is week 12, and that's the same count for all the indices. And so if we get a shorter cycle like we've had these last two cycles, where it was around, one was 16 weeks, the other was 17 weeks, that saves us a little bit, right? And that's ultimately one of the things I love about cycles analysis so much, is that it just gives you at least a little bit of an estimate, right? It says, well, this is week 12. We generally have weekly cycles that last longer than 12 weeks. And so it makes sense that, let's just scenario plan this. And this would apply for all the indices, so I'm not necessarily going to do this for each of them. This is week 9. Let's just say we have a 16-week cycle. That gives us our low on the week of January 30th, right? And to be clear, we'd expect a low below here. And if we think about the bigger picture, though, I mentioned this at the beginning, the Dow Jones Industrial Average may have made its low. When I say it's low, I mean it may not make a lower low in 2023 the way the NASDAQ, S&P 500, and the small caps look like they're about to, right? Like the data just suggests. First off, if you just look at this visually, look how much higher above and we haven't looked at the other indices to be fair, but this is our low on potentially month 31. That's October. And from the low to where we are now, we're still 14% above that low, right? $41, 41 points on this ETF. And so I could see a world where, if you think about the weekly chart, we could see a low down here, right? Like 311, right? And on the monthly chart, right? Like that wouldn't even be below this wick here, right? Which would kind of make sense. So maybe we actually fall below here, right? Like you could see a world where we bottom somewhere around here, right? So we take out this low, so we take out that would be the November low. So everybody that bought, any buys that happened in November, they're gone, they're out. And then we overshoot, right? We cut, and then you can see some kind of reversal there. That's not a prediction, it's a scenario. We're going to watch price action. But this is the strongest of the 4 indices. The Dow, stronger than the S&P, the NASDAQ, and the small caps. Let's look at the S&P. So we're going to look at the S&P cash, the cash index, not SPY, but just divide these numbers by 10 and you get the SPY price, right? So it's right now we're trading at 38.54. That's approximately 385 on SPY. And so we've got 15 minutes left to close. Reminder, it is January 4th. It's the second trading day of the year. And as we talked about, this is our daily chart. The counts are very similar to the Dow, so I'm not going to go into an incredible amount of detail. In the case of the S&P, it made its high for this potential daily cycle on day 6, which was yesterday, first trading day of the year, Monday. We had that high, and then we came down and failed. Yeah, this was a bearish outside daily candle. And now we didn't make a new high today. We're just consolidating inside. And so the story here is we're still inside the range of that first day of the year. It's actually a really simple story. That high was 38.78. The low is 37.94. As long as we stay within that range, we're still just consolidating. And you can see there's like this broader consolidation box, which we talked about. And if we look at the weekly chart for the S&P, again, it's the same story, just different levels. It is week 12, so same exact count as the Dow. You'll see that that's also the same exact count for the small caps. But man, look at these, and that's what you get when you get that kind of choppiness on the daily chart. You get these dojis on the weekly chart. And again, this is suggesting a move lower. In this case, similar to the Dow, you imagine we definitely go below 3,700, right? That pivot is like a magnet. If you've seen the natural gas videos, you can see how that kind of plays out. You have these obvious pivots below, and price just kind of gravitates towards them as the downtrend accelerates. And so I expect that we definitely get down to 3,700, and then pretty good probability that we go and test this low here from the October low and probably break it. And to understand that in a little more detail, we'll look at the long-term chart. So remember the Dow chart? In fact, let's throw up a comparative. Let's look at the comparative on this so that we can kind of look at them side by side. You can see that the S&P is it's like we're much closer to the low than we are for the Dow. Like you can just see that visually. Like that's not a good look, and that suggests to you that things are a little bit more tenuous, right? Like we're just kind of a whisker away from making that new low, right? So this is our 2 panel. We're just getting this to load here. And so if we do SPX on the left, and then we'll do the Dow on the right, we can kind of just see them side by side easily, so not flipping back and forth. You can kind of orient yourself. And this is what I mean when I say, ideally you are able to start to look at a chart yourself and just kind of see, relatively quickly which chart looks more bullish versus bearish, and it's going to be looking at these principles. So you can see the low for the S&P versus the low for the Dow. I mean, look at this structurally. This is on much more solid footing than this, which is just, again, a whisker away from kind of breaking down. And so it's month 34. We could see a world where we get our low on month 35, 36. So maybe this decline goes into March. Remember, we could get our weekly cycle low in the next couple of weeks and then still start a new weekly cycle that then has another lower high. So we have to be aware of that just because we start a new weekly cycle doesn't mean we're completely out of the woods. It's not quite that easy. And we'll go through QQQ and IWM really quickly now to close things out. Same exact pattern, just a little bit different, like in terms of the bullishness versus bearishness. For the Qs, our high came on day 39, which means we topped out early. We had a shorter rally. But also notice, this is just a massive chop zone after we had this little rally up here to day 23. So even more bearish than the S&P, which wasn't an amazing cycle. And in the case of the Qs, we have our high on day 3 so far. That was yesterday. Because the Qs also took longer to bottom than the S&P, made a lower low after the Qs had already held a higher low. So if there's a short opportunity, it's definitely the Qs or IWM, which we'll look at next. And again, same count, week 12, except a little bit different, right? Notice that the S&P and the Dow were like these little dojis consolidating at the lower end of the range. Do you notice the difference for the Qs? The Qs has continued to make lower lows for the last 4 weeks, right? This is much lower than this. This is the Fed week. This is an identical candle for all indices. Then we made a lower low. Then we made another lower low last week. And this week we're setting up for a bearish outside weekly candle. So incredibly important that you understand this pattern because it's a high probability pattern. It's something that they teach as part of the strat. If you're not familiar with the strat, definitely look it up on Twitter. A very good way to like tactically understand candles and price action. We made a higher high above this candle, and then we went red. And so we are on track to make a lower low, and in this case, that would be below $259.73. So that's another $5 lower from here. And that would be on our path to our weekly cycle low, which we expect will be below this low from October, which is 254. So again, if there's a short opportunity, it is the Qs. And if we look at the monthly chart, same kind of idea, except again, thinking about the S&P versus, so this is the S&P on the left. Let's look at the Qs on the right. Look at how close the Qs are to their low. I mean, it's just, if it sneezes wrong, and you should be able to just see that visually, right? If it sneezes wrong, it's already made a new low. Look at that. You see that versus this, how much acreage is below the low and right here. Essentially, how much has this swing low failed? That's the other thing just to keep in mind. Right now, this is a swing low, but we have to stay above $254.26. I have a feeling we're not going to be able to do that given that we're in a downtrend. And again, if it's not clear to you, like in your mind's eye, look at this just clean downtrend, lower low, lower high, lower low, lower high, lower low, lower high. What comes after a lower high? That's right, a lower low, right? If you looked it up in a textbook, this is what you would see for a downtrend. It's a downtrend on the monthly, downtrend on the weekly, and now the downtrend on the daily is starting to resume, right? Because we're consolidating here, and I suspect we're going to break down. And finally, let's look at IWM. That's the small caps. This would be another candidate for a short, although the Qs are weaker by far. So this is pretty interesting in that last cycle topped out on day 23. So again, another way of thinking about that is the Dow rallied for like 44 days. The S&P rallied for 41 days. The NASDAQ rallied for 39. So kind of similar, except remember, we saw that was like, it's hard to call that a high on day 39. It is mathematically, but it was really just chop right up until that high. And then you have this thing that topped out on day 23 and then has this like double top that was a lower high, right? This is a high at 189.24 and this high is 189.56. So we missed making a new high by like 25 cents. Very bearish, very bearish. And just in case you can't, like, look at this downtrend. Like you again, so this is interesting because this is kind of a fake out, or this is setting up to be a fake out, right? That we're trying to make this higher high above here. But, you know, tactically speaking, we have to get outside of this range. And that's the same story for all the indices. So the range from yesterday is a low at 171.90 and a high at 177.32. So we have to get out of that range to really get anything going on the daily chart. But to be crystal clear, we are in a downtrend on the monthly, right? Like just as we drew that downtrend for the Qs, it's a downtrend for this guy too, except here, oh, that's a double bottom. But is this a lower high that's going to break this double bottom and do something like that, right? These are the scenarios we want to watch for. This is what you want to position yourself for. We may be coming into a really important buyable low, but you're going to have patience and discipline and make sure that you're watching the price action. We will do that together on this channel. I'll provide regular updates. And as things happen in real time, I'll definitely try to tweet as possible. But for larger developments, I'll definitely be giving more detailed updates here. So I'll leave it at that. That was a lot of information. But again, understanding what the broader market is going to do is going to be the most important thing for any other set of assets, whether it's precious metals, energy, uranium, etc. Because this downtrend is going to drag everything down with it, is my expectation. So we'll continue to watch the price action and try to uncover those opportunities here in 2023 for the community. Thanks again for joining, for watching. And if you haven't subscribed, definitely hit that subscribe button and make sure you hit the notification bell so that you know when a new video drops, because I do try to make these timely to make sure that people are aware of important developments. I wanted to put this video out after this 12 days of chop just to give folks a sense of like, there's not much happening here, right? But we have clear levels that we're watching for a break above or a break below. That's all we have for today, folks. Thank you for watching.